Starbucks just made Josh Brown's best stocks list as its turnaround gains real momentum after years of stagnation and tough market challenges. Despite a 20% drop in the last 5 years, Starbucks remains a caffeine giant with dependable daily demand, even when your wallet is tightening. Josh Brown highlights Starbucks' struggles with China's 14% sales drop and a 7% decline in North American sales after price hikes pushed iced lattes to $8. The key takeaway: Starbucks is shifting focus by selling its China business this year, betting on North America's recovery to stabilize your investment. Here's where it gets interesting. Starbucks' reliable daily coffee run is seen as an affordable luxury, making it a potential safe harbor for your savings. Starbucks is betting big on tech upgrades this year, including AI powered ordering to speed up your morning run and boost sales by an estimated $500 million. The company plans to close underperforming stores in China, cutting nearly 200 locations, aiming to improve profitability and focus on more lucrative markets by Q3 2026. And here is where it gets interesting. Starbucks' loyalty program now boasts over 30 million active users, generating $1.2 billion in annual revenue directly from repeat customers. Howard Schultz, Starbucks' former CEO, revolutionized the brand by turning it into a global coffee icon, a legacy still driving investor confidence in 2026. Seattle's Starbucks birthplace remains a key innovation hub where new store concepts and sustainability efforts are tested before global rollout, impacting your coffee experience. Starbucks is also betting on expanding its reserve roastery concept, aiming to attract premium customers willing to pay $50 or more per specialty drink. Kevin Johnson, Starbucks CEO since 2017, is steering this turnaround with a focus on digital innovation and sustainability to boost long-term growth. Seattle's Starbucks Reserve Roastery, opened in 2014, serves as a flagship for testing new coffee experiences that command higher prices and customer loyalty. Starbucks' push into sustainability includes plans to reduce carbon emissions by 50% by 2030. What makes this Kevin Johnson, Starbucks CEO since 2017, is steering this turnaround with a focus on digital innovation and sustainability to boost long-term growth. Seattle's Starbucks Reserve Roastery, opened in 2014, serves as a flagship for testing new coffee experiences that command higher prices and customer loyalty. Starbucks' push into sustainability includes plans to reduce carbon emissions by 50% by 2030. It could increase operational costs but attract eco-conscious consumers. Luckin Coffee, Starbucks' main competitor in China, continues aggressive expansion, putting pressure on Starbucks' $1.5 billion China revenue stream. Starbucks' turnaround momentum caught the eye of analyst Morgan Housel, who praised their renewed focus on operational efficiency and customer experience improvements. The shift to digital ordering and contactless payments is accelerating Starbucks' growth, driving higher average ticket sizes and faster service in over 15,000 U.S. stores. Meanwhile, Starbucks' partnership with Nestle continues expanding global distribution, reaching more than 130 countries and boosting their packaged coffee sales significantly. Starbucks CFO Rachel Ruggieri recently highlighted that their cost-cutting measures will save $300 million annually starting in 2026, directly improving profit margins. But here's where it gets interesting. Starbucks stock price is now testing key resistance levels, signaling a potential breakout or a sharp pullback within the next 30 days. Starbucks CEO Laxman Narasimhan Tilstead sent or Fred Gain Solar. The thick over in 2022 is pushing aggressive cost-cutting measures to offset the $500 million annual losses from China sales. Seattle Starbucks headquarters remains the nerve center for innovation, driving new product launches and digital strategies to boost your daily coffee run. Here is where it gets interesting. Starbucks' shift to premium reserve stores aims to increase average customer spend by $3 per visit, directly impacting your wallet. Nestle's ongoing partnership with Starbucks means your favorite coffee could soon be found in over 30 million new retail locations worldwide by 2027. Analysts warn that if Starbucks fails to regain North American traffic, your $8 latte habit could face price hikes beyond 10% within the next year. Starbucks' turnaround is also fueled by a new focus on premium products, targeting customers willing to pay $10 or more per drink for exclusive blends. Starbucks Reserve Roastery in Chicago, opened in 2019, is a flagship location showcasing rare coffee experiences that justify higher prices and build brand loyalty. Laxman Narasimhan, Starbucks CEO since 2022, which is Danas Compressalsas, is pushing innovation that blends technology with premium offerings to boost average customer spend above $7 per visit. Starbucks is also expanding delivery partnerships, aiming to increase convenience and capture an extra $500 million in annual revenue from on-demand coffee orders. This shift to premium and convenience means your daily $5 coffee could soon become a $7 habit, impacting your monthly spending by nearly $60 more. Starbucks' turnaround is also driven by a revamped menu focusing on healthier options, aiming to boost sales by attracting the growing wellness-conscious consumer base. This shift could increase your average purchase from $5 to nearly $7 per visit, adding up to an extra $240 annually if you visit Starbucks just twice a week. But here's the catch: rising ingredient costs mean Starbucks may raise prices again by mid 2026, potentially pushing your $8 latte closer to $9.50. If you're a regular, that price hike can drain nearly $300 more from your wallet annually. It's time to reconsider your daily coffee budget. If this saved you even one bad financial decision, hit subscribe. Your future self will thank you. Drop a comment. What's your biggest money worry right now?